What is up, ladies and babies? I wanted to recap my best trade of all time. This was a 1 to 22.33 hour trade. I also want to go over how I refined my model and structured it in order to allow me to catch said moves like this. I also want to go over how you too can build the confidence within your high conviction draws and liquidity in order to continue to hold toward them, increasing your RR. While I was within this trade, we ended up hitting TP while I was driving, so I was not at my computer. I don't have a live execution for this. However, I do have the screen recording of the take profit getting hit, order getting filled while I was driving, so here's that.
This is going to be tough for you to hear, but 2026 is 25% done. Just like that, boom, done. 25% done. There it is, done. Never coming back. That's it. That is 25% done. That's all you have. So here's the deal. We've got 75% more. So if you haven't started, get started. This is a video to remind you that this year was the one you talked about, the one you're like, this year is going to be, everything's going to change. I'm going to go to the gym. I'm going to start that business. I'm going to take care of my parents.
I'm saying this as a little side note. I'm intending on switching to a more educational style of trading. Let me know if that's something you guys want to see. But apart from that, enjoy the video. I recorded this at the end of the video and I just clipped the input in the beginning. Now, before we scale down in time frame onto the 1 minute where the execution actually occurred, I want to do an overlook of this week because this week played a huge factor in this trade today. The previous week, we had displaced 1,500 points. The last weekly candle was 1,500 points, just about. Coming into this week, we formed a bearish new week opening gap and immediately invalidated that going into Monday. So New York Open today, we were already up around 1,100 points on the week, forming that weekly open, low, high, and close. With it only being Wednesday and us being near all-time highs, I assumed that, hey, we have strong confluence in order to take all-time highs today. Also being that we have no opposing, sell side liquidity to take. Coming into the day, now we can get nitty gritty on how we utilized YM because YM played a huge factor in understanding the Kraken correlation in order to have allowed us to properly have timed this move. Scaling down now to the 1 minute, we had data high at 746. This was news between Trump, China, so this does still count as a data high, and range highs resting above us. Upon New York Open, what ended up happening? We ended up initially edging data highs before taking it, as well as range high, and the same thing happened on ES and YM. However, YM did something entirely different. So once we ended up taking range highs on every single pair, we had nothing left to SMT off of for a reversal. Meaning we had to form a lower time frame SMT in order to continue to see that reversal lower. Rebalancing price before moving higher again, following through with that weekly candle. What ended up happening? We did exactly just that. We formed a regular SMT, not a sequential SMT. And with all this being said, once that occurred, YM, right after having taken range high, dumped. When I mean dumped, YM dumped. YM dumped 418 points. Sorry, that's over excessive. YM dumped 353 points. So it was down 0.45% on the day, with NQ still having been up around 0.3. This gave me additional confidence that, hey, now that the Kraken correlation has occurred and we have potential to form and validate that daily cycle sequential SMT, we can begin to look for longs. And that is exactly what we did. As YM continued to crawl down and whatever it was doing, that was our confluence that now we were looking to potentially see that reversal. First with NQ starting the continuation, then ES following, then YM following through later on the day. Once that occurred, same old happened. 1 minute PD array formed, tight stop loss, 11-point SL. Had our initial standard deviation targets at -2.5 and -4. This -4 was 1 to 20R, just about 1 to 20R. However, our actual draw on liquidity were these resting highs up here on the 4-hour weekly time frame. Call it what you want, higher time frame. Those were our prominent draws on liquidity that we wanted to see continue to get taken, because once again, following through with that overall higher time frame weekly candle toward all-time highs allowed us the conviction that, hey, or provided us with the conviction that, hey, we really do have confluence in order to take these highs and really see all-time highs taken before the end of the week. So what did we end up doing? We set a partial at -2.5 and then allowed the rest of our contracts to run toward those external highs. That was the overall trade. Now, what I really want to get into is how you can build a confidence behind your trade. Now, what I want to touch lightly on is how you can refine your model in order to build the confidence within your high conviction draws and liquidity so you can begin to hold your trades for an increased RR. When you see people catch crazy risk reward trades like this, it doesn't always have to be bottom ticks or top ticks. I don't bottom tick or top tick. I trade normal PD arrays. However, I understand the invalidation point of my PD arrays that I am utilizing as an entry. I wanted to add to this also narrative. So entry, understanding the invalidation point of the entry you're utilizing, the true invalidation point, and understanding overall higher time frame narrative, which really allows me a tighter stop loss than most people utilizing these same entries. So now that's one thing. There's two ways you can really refine your RR. One, with a great entry, or two, having amazing targets. Sorry, I had to scratch my eye. However, if you could do both, of these things, it puts you in a really, really good position in order to consistently catch said high RR moves. So the first thing is refining your trade entries, truly understanding the invalidation point of the PD array you're utilizing, allowing you to tighten your SL. If your entries are great, then that's awesome. Then that takes us to the next thing. The next thing we need to focus on are your draws on liquidity. Do you constantly find your draws on liquidity getting hit through the end of the day? If the answer is yes, rather than no, then what this means for you is you need to refine your risk management structure in a way that allows you to catch said move if you do want to catch more of that pie, more piece of that pie with these daily moves. Now, this only relates if you're oftentimes aligning yourself with the daily and the 4-hour candle. If you're not, then this can 100% still be implemented toward low resistance liquidity and, relative current prominent draw on liquidity. But for the most part, being able to catch daily moves and hold throughout the day in order to catch moves like this consistently, that's something you'd want to focus on really understanding, hey, where is the daily candle looking to print? But once again, if you understand where the daily candle is looking to print, then the next thing is refining your risk management model in order to allow yourself to take partials within these moves and let your balls hang and really leave your limit and walk away from your chart and hold toward your high conviction setup. Also, I want to add this again. Be excited when you get stopped out when you're looking to refine your model. When you're losing and winning, the excitement should come from you collecting that data and refining it in order to properly utilize it and structure it, allow it to structure your trading model accordingly moving forward. Wow, I'm a lot more clear when I'm watching back these videos. I think I need to take a step back and stop yapping within these videos. However, the main point is this: collecting the data based upon what is working and what is not working. If you never take the time to collect data, you never get the insight in order to fully refine. I refined my risk management model in order to allow me to catch more of the move because I found that I continue to align myself with the overall daily candle. And that is huge. If I had never allowed myself to sit there and lose and journal said data and implement it into my mind map in order to properly structure it so I can understand whether or not this would increase my expected value, I would have never got that clarity. So allowing yourself to really take those losses and take those wins, and then reviewing that data, structuring it properly, understanding, the entry mechanics you're often utilizing that allows you a higher risk reward, better precision, understanding the draws and liquidity you're often targeting, the win rate within those draws and liquidity you're often targeting, paired with the win rate, understanding the win rate pertaining to your accurate entries, how often you're aligning yourself with a higher time frame candle. All of this will play a huge factor into allowing you to catch higher RR moves, and at the end of it, letting your balls hang and just allowing the market to do its thing. If your draw and liquidity is right, if you understand where the market is looking to go, then good. Let the trade flow. Literally let the trade do its thing. And you'd be surprised about the moves you'd be able to catch. Anyways, that's all from me. I hope you guys enjoyed this trade recap, and I will see you in the next video. Let me know what you guys want to see. Comment below if you're struggling with anything within your trading. I know I was very, very broad today, but if there's a concept you want to see me go more into depth of, then let me know. I will gladly make a video on it. But anyways, love you guys. Peace.